Hi everyone, today I'm here and I'm making a different sort of video. As one of my trader friends, whom I have so much respect for him, he suggested me to make a different sort of videos, and I was like, okay, let's get ready and give you an update about my recent position on shorting semiconductors. So late in February, around I think 26th of February, I decided to like shorting semiconductors, or like the ETF of semiconductors called SMH. Um, and back then, instead of like shorting these shares of SMH, I decided to buy the inverse 3x leverage on SMH, which is SOXS. And basically, when like semiconductors ETF start falling, for example, if semiconductor start falling for 10%, the ETF itself is gonna like be up about 30%, because it's like it should be acted 3x inverse of the underlying asset. So when I shorted semiconductor by buying the SOXS, um, at the beginning I was down for 2 days or so, and I kept my position because I knew that semiconductors and overall market gonna fall a bit, and we are gonna have a bit sort of correction. um, so at the same time, because I'm Persian myself and I know the war situation and everything, and the impact of war on the um, economy, so I knew that we are gonna have like some sort of correction in like Nasdaq or tech, semiconductors, which usually leads the Nasdaq. So I decided to short back then. So, um, but the interesting part is that this sort of leverage ETF always is not is not like act. They are not like acting the exact for example, like 3x of the underlying movement. For example, you probably say, okay, so if semiconductors gonna like fall for 20%, so the leverage of the semiconductors should uh, go about like 60%, right? But this is not the case all the time, but it should be. So I had different levels on my semiconductor chart, and I was waiting to reach at least one of the major levels, which was like 650-ish. So like I was holding into my short position, or let's say that I was holding into my long position on SOXS, and I was up about 50 something percent and on my position. And so because I was looking at this position as a like a short-term swing trading, or whatever you want to call it, short-term, for example, shorting the market, and I knew that it's gonna, like I was expecting, let's say I was expecting that semiconductors fell more than that, and I was like keep holding, and as I said, I was up about 50% on my position. And yeah, so on March 30th I was up about 50%, because we had the swing low is on the March 30th. But what happened on March 31st? We had a like a gap up in overall market. We had gap up in S&P 500, we had gap up in Nasdaq, and also we had gap up basically on semiconductors. And then, so since we had the gap up, I was still holding into my short position, or like having the SOXS, right? And then that day the daily candle closed very very bullish, and so like most of my profits went away on that specific day, on March 31st. And then I was like, okay, I'm not gonna close this position because I am expecting more drops. But this was my mistake, because I was like, okay, I'm expecting the market to drop more. The thing is, my expectation or anyone's expectation doesn't really matter, right? Market doesn't listen to us, listen to retail traders, right? So I didn't close it, and that day my position, which was up about like 50%, maybe it just went up about maybe like 20%, because that day was a massive bullish day. And then on April 1st, we had another gap up. And as soon as I see the gap in overall market, in S&P, in Nasdaq, and semiconductors, I was like, okay, I'm gonna close my position. I don't care, because we clearly had the break of a structure on the daily chart. So I closed my position with about like less than 10% profit on this specific position. And I was like, okay, I could have more profit, like 50%, but I was greedy, and I was like sticking so hard on my prediction that we gonna have more drops in the market. So I let my 50% went away, and I ended up closing my position with less than 10% profit, which is still fine because I didn't lose money, and I'm still up on that close position above like 9% or something like that. But this is the another lesson for myself and all of you, that, for example, if you have some sort of leverage products, such as like leverage ETFs, in both upside and downside, or let's say you um, decided to short market with buying some put options or shorting some calls, which is very dangerous. I'm not recommending to like anyone to short calls unless they have a vivid strategy, like a solid strategy, and they know what they are doing. But even with the put contracts, um, these types of days that we have like a gap up, gap down, it can really ruin your position within a day. For example, you were in a position for over a month and you were up like 50%, and then just a day with a giant gap can just clean up your entire uh, like profit in, just as I said, in a matter of 1 day or 2 days. So here is the lesson for today. I'm not gonna sure that what's gonna happen in next couple of months, or maybe next few months, because everything is very unpredictable right now. And my prayers are with my family and my friends in Iran, and all of my Iranian like brothers and sisters. But the thing is, everything is very messy right now, and you can really predict the market um, clearly, because President Trump one day decide to just start his day with a bad mood and just tweet something and everything goes crazy, right? So you cannot very predict what is in his mind or what is in the other politicians and leaders in the power's mind. So this is the today video. I hope you liked it. I just decided to do something different and not just showing charts. I just wanted to make a different video and just talk about my latest swing trading position. And right now I don't have like a much big position in terms of swing trading. I only have one swing trading position open on Microsoft call, um, and it's gonna expire by April 10th, because like I was looking at the daily chart of Microsoft, and I saw that Microsoft reached out to some levels that I had on my chart. And with my analysis, maybe I'm going to be wrong. Maybe I'm going to lose money in this specific position with the put option, call option. Um, so let's see what's going to happen. But right now, the only swing trading position that I have is Microsoft call. It's going to expire on April 10th, this Friday, and I'm expecting Microsoft to have a little leg up and see what's going to happen next. Either the stock should be just consolidate for some time and get some energy to go up because it's down a lot, or again another tiny leg up and then some consolidation, or just rejection off of the other levels that I have on my chart and then fall more. So we should see what's going to happen in the overall market and each stock individually. So have a great day, everyone.